Welcome to the today's live webinar session on Ask Me Anything with Nishant Arora. And right now we have about 66 participants that is joining us in this live webinar. And thanks again, everyone, for taking up precious time on a Sunday evening to join us. And so today's session is going to be about Ask Me Anything with Nishant. So if you have any questions that you would like to ask Nishant, please head on to the chat segment on the right hand side of this webinar portal and try to just post any questions that you would like to ask him. My colleague Gladwin will help to tag all those comments into questions, and later on during my conversation with Nishant, I will actually scroll through those questions and find the most appropriate questions and post it to Nishant for him to actually answer. All right, so now for the benefit of those of you who is for the first time getting to know Nishant, I'm just going to do a very quick introduction of who Nishant is before I actually start to invite him to start speaking. So very quick, brief introduction. Nishant Arora is a full-time professional stock market investor and trader. And but despite starting his career in traditional business ventures, he subsequently stumbled upon the stock market first as a value investor and then became a technical trader. So Nishant is also the founder of the Techno Funder Society, a very engaged Facebook group of traders where there are currently more than 16,000 members. And this is the main platform where the group members ask questions and share their personal trading experiences. While at the same time, Nishant also made use of this Facebook group to regularly dispense his trading philosophies and principles freely with the intention to help traders on the right path. So that's basically a very quick background of Nishant Arora. So, all right, there's this one of the first few questions from Rock. All right, so the participants who are listening in right now. Okay, so what I'm going to share with you is usually what I will do is I will run through all the entire list of questions, and usually I will pick the one that is most appropriate and before I actually ask Nishant. So some of those of you actually ask questions which are really big topic, like how to select stock. That is really a big topic. So I would appreciate if you have any questions, please ask more specific questions, because we only have 1 hour. We can't talk about something as big as how to pick a stock. All right, so I will try to ask those questions that are slightly more specific so that Nishant can actually answer very quickly. All right, so this one question from Rock here. I am reading The Intelligent Investor but unable to apply the concepts and concentrate while reading. All right, so what should I do? So Nishant, so do you have anything to share about in this particular example over here, reading and applying concepts? What's your thoughts on that? Because I think that this participant is finding problem or issues with looking at what he read and applying it. So is there some kind of problems that you have previously? How would you suggest for this participant to overcome such issues?
Okay, so first of all, I'd like to say that it's a very good question, and I think it's not just Rock alone. Many people might be facing these kind of issues. Okay, so I just, in my view, the Intelligent Investor, the specific book, it is quite dry, if that's the right word. It's quite dry and quite technical. The most significant reason that one would face a difficulty in applying the concepts of the book is a disconnect between the personality of the person, right, and how it gels with that book. What I'm trying to say is, Intelligent Investor is not for everybody, right? So, in case you have a type A kind of personality where you want some action, where you are not so patient enough to check hundreds of balance sheets and hundreds of profit and loss accounts and then wait for the market to give you an opportunity to enter. So I think, and this is not the first time that I'm getting this query. In fact, there are lots of people who find specifically these two books, The Intelligent Investor and The Security Analysis. So I have heard it from hundreds of people that they start these two books, but they just couldn't get through. That's majorly because these books require a certain amount of patience inbuilt in the character. So my suggestion would be that first you must try to understand yourself, whether you are truly made for being an investor or not. In case you want to play small things and fast things, I don't think Intelligent Investor is the right book for you. But if you have chosen to read a book like Intelligent Investor, my first suggestion would be that you should be very, very fluent and thorough with the accounting concepts, right? Investing is finance, and finance comes second. First comes accounting. So people who don't understand accounting and still read Intelligent Investor, they get stuck. So I would like Nishant to understand from Rock.
Right, Nishant, can I just stop you for a while?
Yes, Philip.
I am getting comments from the participants that your voice is breaking up, and from the way I look, it is the same case for me as well. And your image is frozen anyway. So can I just suggest that you turn off your webcam and we try to get at least the audio conversation going?
Is it okay now?
Yes, now your voice is not breaking up, at least based on what I'm hearing right now. So can we just keep this as it is? For now, we can still see your image, except that we cannot see your video itself. So let's continue this for a while more, and to see if at least we can try to get the conversation going. So yes, you were talking about that Intelligent Investor book might be too technical for people to understand, and that could result in a disconnection between reading the content itself and applying it, right? So all right. So do you have any follow-up to comment on that based on what you have just said earlier on?
What I'm trying to say is that if you don't have any background in accounting, you will not get a thing from the Intelligent Investor. So my first suggestion is that you should have a background in accounting. In case you don't have an academic background, kindly read a couple of accounting books, so that you know how financial statements work, how ratio analysis is done. Once you understand these two things, basically, only then the Intelligent Investor will make any sense. This is the first thing. The second thing I talked about was that you must also understand that how well investing gels with your own personality. Not everybody can be a good investor. So you have to understand, if you are impatient, if you don't enjoy reading numbers, if you don't fancy reading at least 10-20 balance sheets on a weekend, then maybe the Intelligent Investor is not for you. This is a very blunt and brutal, truth that I can put across.
I see. Nishant, yes, I think you are very right about that point. And by the way, just to update you, your audio is perfect right now. The participants are also commenting that they can hear your audio properly. So I really think that it is the webcam that is taking up the bandwidth. So let's just remain as it is. I think the participants would love to hear your voice than to see both your image and your audio breaking up. All right, so let's just maintain it this way. I have a lot of questions coming in, so I'm going to continue to ask them over to you. So there's one question from R2 over here. How to control emotions while trading? So Nishant, would you like to share a bit about how are you constantly in flux with emotions when you are trading, especially like on a short-term intraday trading perspective, and how do you actually control them, or at least overcome or manage them?
Okay, so I think this whole approach of reaching this subject, that how to control emotions, I think this is not a right way to approach things. The reason being that the connotation of controlling something, it's a negative connotation, right? Emotions are things which make us human. You cannot actively try to control them. The more you would actively try to control them, the more you would become slave of an emotion. Controlling an emotion is also an emotion. If I'm continuously trying that I should not be angry, that is also an emotion. So what I suggest you to do is, that's the one who asked the question. What I suggest is that do not actively be conscious about controlling the emotions. What you must do is that you must I always say, Philip, that how good you are a trader depends upon how good you are a person. So how you are in your real life, it reflects in trading. It cannot happen that in your real life you are very emotional and sentimental about things, and the moment you switch on a trading screen, suddenly you become a icy cool kind of a trader. It doesn't happen. So the very simple advice and a long-term advice, see, it's not a short-term solution. it cannot be resolved with a patchwork. It's a very, very long-term problem, and it requires a long-term solution. I always say, that a trader makes strategies, a trader makes plans, a trader does analysis, right? So it's you who are doing all this, but it's actually your psychology that makes the you part of it. Most people, they focus on the trading thing. How should I improve my trading? But a trading is as good as a trader. So you must try to resolve your life issues in case you want to resolve your trading issues. Having said that, my question is, it's an irony that I am asking a question in response to a question. My question is that trading is like any other business. And when you do any other business, do you get infected with those sudden surge of emotions? No, you do not. You do not, right? Why? Because the time horizon and the clarity and the plan and the objectives of your business are clear to you. The only reason, by saying that how to control my emotions, as I said, it's a wrong approach. The right approach is most people face a sudden surge of emotions just because they have not defined what they want to do.
I see.
Right?
So
the first task should be, the other day I did a post on this. The first task should be, you should write, not just think. You should write on a paper that what is your mission of your trading business? What is the vision of your trading business? What are the objectives that you are trying to achieve? You should also write the milestones that you would want to achieve over a period of time. Right? You should write that which instruments you would use, which markets you would use. Write down on a paper your trading rules, principles, and insights. The moment you do that, you would automatically tackle your emotions in a way. The only reason that most people feel emotions during trading is because they don't know what they are doing. So this is the only thing. You cannot go about controlling your greed. You cannot go about controlling your fear. It's not that easy. You have to change as a person. And that is a long-term solution. And that is why very, very few people make it as a trader. Because nobody wants to work long-term.
I see.
Yeah.
So I suppose what you're trying to say is that emotions in trading actually evolves from you as a person in your everyday life as well. So if someone is very emotional in his everyday life, very most likely he's going to carry that into his trading as well. So which means that realistically, the best way to be able to learn how to handle your emotions in trading is you need to learn how to handle your emotions in your everyday life first as well. Am I right to say that?
That is first. And second most important point is that write things down. Most people, when they start trading, the other day I was talking to somebody, he messaged me that he's trading for last 5 years, but still couldn't get consistently profitable. And when I asked him, okay, what are your trading principles? And he had no answer, This is surprising. Most people, why do most people do not write their trading plans? Should I give an answer? Because they don't have any. They don't have any trading plan. So the moment you write your principles, the moment you write your plans, the moment you write your strategy, the moment you write your objectives, suddenly you get logical about everything.
I see. So which means usually if you ask anyone, have you write anything down, or if I ask you to write something about your trading, what would you like to write? Probably most people will just write, oh, I want to make money.
Yeah, absolutely. Yes. So it's too vague. You cannot be successful using vague approach.
I see. All right, great. So we still have a lot of questions. So I'm going to cut you off on this particular question right now. So next question from Ganesh. This might be a little bit personal because he's asking about what has been your biggest handicap in the markets so far. So maybe Nishant, would you like to just address it from your own perspective? What is like some of the biggest handicap or obstacles that you have faced in trading the markets before? And are you still on a personal level facing any kind of handicap or obstacles in your trading at this moment in time right now?
Okay. Can you hear me? I mean, just wanted to check if it's all right.
Yes, it's perfect.
Okay. As I described in my interview, when I started trading, I already had a background in starting businesses and running them. And I already had a background in investing. I know it's hard to believe, though that acted as a great strength, for me to become a trader. But that also raised a couple of obstacles. The obstacle was, when I started my business, when I started my first business, I had a very, very long-term horizon, right? So even if I lost some money, I would think of that as investment in the business, right? When I started my exports business, I was not profitable for, I think, 1.5 years. And I spent a lot of money in that business. So I took that as investment. Similarly, when I started investing, a couple of years, there were cases that for a couple of years, I couldn't make any money in a specific stock. But that's okay. That's normal. In stock market, you make money in spurts. You don't make it regularly. So when I came in trading, this was an obstacle. The point I'm trying to make is the moment I was in loss, I wasn't worried, right? Because I thought that this loss is an investment. That I'm just starting a business. This trade is my business. And so if there is a loss, if it's in negative territory, I was not worried. I was not concerned. So I would say that my biggest obstacle was, to cut loss at the right point. Because I was not used to cutting losses. I started a business of medical tourism, and I was in losses for 2 years, but I didn't cut the loss. I continued doing the business, and eventually I got profitable. So in trading, when any of my positions, when any of my position went in negative, I didn't cut it, because I was habitual of keeping my losses and thinking of them as investments. So I think it took a lot of time to get over that, to understand that cutting losses is part of this business. So this is something that I really had a hard time with. And if you ask me that what is my obstacle right now, I think I would say I get a little aggressive at times. I take risks which I shouldn't. And obviously I have to pay for them. But what I'm trying to say is that sometimes just because that you can pay for your mistakes, you tend to do those mistakes. You getting me?
Yes.
So this is something I'm very frank, and I'm very blunt with my people who love me. So yes, I do take some certain risks at some point of times, because I know that even if I'm wrong, I'll be able to afford it.
I see.
So I'm actively trying to change that.
Yes. I think that's just what make everyone human, right? Even top traders, one of the very best traders, they are constantly struggling with obstacles as well. So anyone who is actually trading and facing obstacles, I think that is just the rites of passage for any kind of trader. So I have a next question for you right now, Nishant, by hold on, let me see, by Amit. Okay, so this is a rather technical questions, as in terms of the instrument itself. So what is better in option trading, shorting options or buying options? So Nishant, do you personally trade options, and do you have any take on this? Because I believe I've read some very commonly asked questions as well. There's always like two schools of thoughts between shorting options and buying options, and there's always argument which one is better, which one generates returns for the trader over the long run. Would you like to share your take on that?
Okay. See, as far as options are concerned, before I get onto the specifics of this question, I would like to tackle the whole concept of trading options. When a saying goes in the options world that only beginners and very advanced people, only these two kind of people trade options, right? The beginner thinks that it is very easy to afford options. They are very, very, very cheaply priced. So options are cheaper. That's why they play. And since volatility works big time in options, they can make easy returns. This is why beginners buy options. This is one part of it. The advanced players, they know that there is a time exhaust, there is a time decay in options. That is why they sell options, and they think that selling is a better strategy. Having said that, I think options are one of the most complicated instruments in the market. When we trade in cash segment, our only instrument is price, and our profit and loss is directly related to the price. If we are long, our profit is linked with the price going up. If we are short, our profit is linked with the price going down. Similar in the case of futures, because in futures we only have two things to watch: the spot price and the futures price. However, in options, it's not just the price of the instrument. It's about which is the right strike to trade, which is the right, is that strike premium overvalued or undervalued, right? What is the status of Greeks? So I think, most people who actually trade options, honestly speaking, they shouldn't do it, because they actually don't know what they're doing. But to answer this specific question, whether one should sell options or buy options, I think this is it's not a black and white territory. It's life and markets don't work that way. You have to adjust yourself. You have to understand every single strategy that is associated with the options. As of now, I do not actively trade options, but I use options for hedging my investing portfolio. I do not trade it, right? So that's how limited my exposure to options right now is. But I would suggest that, when you buy options, okay, I know some people, there are certain Twitter handles and certain Facebook groups which say that option selling is the way to go. No, it's not that. Rightly done, even option buying can give you profitable opportunities. In fact, it is little less riskier than option selling. I mean, selling requires a margin, right? It's leveraged. Buying is not leveraged. You're buying something you are paying upfront. Having said that, you have to be very, very thorough with the Greeks, that how volatility affects the price of the options and how time decay is affecting the price of the options. You have to understand all that. But you do not expect a single line answer. Okay, option selling works. Everything works. You have to know what to do when.
I see. So in a way, I think options probably is just like any other kind of instruments or derivatives that you might use. There's always pros and cons to it.
Yeah,
and you probably need to understand what are the pros and cons.
Do you ever ask, should we only short the futures or should we only long the futures? You do not ask that, right? You do what is necessary. Same in options. You do what is necessary.
I see.
Philip, I recall a quote which Charlie Munger once said. Though, quoting Charlie Munger in a question related to derivatives is a sin, but I would still do that. Charlie Munger said, to a man with hammer. So if you just specialize in option selling, I think you would see everything in that perspective. If you specialize in options buying, you would see everything in that perspective. This does not work. You have to acquire both, and do not get biased with buying or selling. I mean, what is buying and selling? Buying and selling are just two possibilities that you can do with an instrument. Why to limit yourself to only one? I think you get my point.
Yeah, definitely. Yeah. So I think like whether you decide to enter which direction, buy or sell, whether it's futures, cash equity or options, that you must understand what are the pros and cons of either side and make a decision accordingly from there. So let me move on to the next question over here from Atu. So we are constantly flooded with information, especially I think what he meant is information with regards to learning how to trade. So how do you actually concentrate on what is the right thing to learn or concentrate on? What are the things that to just focus on to apply? Nishant, I think that's a pretty good questions and a common question as well, because right now we are always flooded with different kinds of information from different trading gurus, from different people talking about different things. How do we know what are the right things to follow? Do you have any suggestion or advice on that?
I'll give you I'll start the answer with a small example, a small story. I think some 8-9 months back, a person on Twitter, he asked me a question. He asked me that, how should he start trading? And I gave him a list of a few books to start with. After 2 months, he again messaged me and he asked me, hey, does RSI work? And I asked him, what about the books I gave you? And he had no answer. After 6 months, he asked me, what do you think about market profile? I said, hey, what about the books? And again, he had no answer. And after 8-9 months, he asked me, hey, do you think technical analysis even work? And I said, what about the books? Did you read them? And he had no answer. So my point is that we are actually living in an era of information overload. Every person is a member of numerous Facebook groups and Twitter handles, and everybody gives a different kind of advice. People just don't know how to concentrate on the basics. So my suggestion would be, rather than trying to understand what to focus on, get your basics strong. And the only way to strengthen the basics is to read at least 4 or 5 right books. Start with technical analysis, at least know the very, very basics of technical analysis. Then read a couple of books on trading psychology, and let your own mind come up with a strategy, with a scenario, that how you perceive trading. No matter how much I talk, no matter how much I teach you, you are not me, right? You cannot think the way I think. You are not me. You have to develop your own way. So give yourself that space at least. This is what I'm trying to say. So you have to give, I sometimes back, I wrote a quote. I said that, do not look for more Facebook groups. Look for more trading books. So I see a lot of people, today they are trying moving averages. After 2 months, they are trying RSI. After 1 month, they are trying stochastics. And after 3 months, they are into GAN. Where are you going, man? People make millions just using simple support resistances. So I think one can be very, very benefited if one just shuts off the noise. And noise is, shutting off the noise is enlightening yourself. So that would be my suggestion.
I see. Great point.
We in TFS, in TFS, we have been emphasizing this point for a long. We have been giving the list of books to read for a long time. But little blunt here. I can give you a list of books to read. I cannot read it for you, right? And just because you don't invest enough time in reading, you get swayed when anyone on Twitter posts his profit and loss account. I see a lot of things. A trader says that I made 65 lakhs last week, and everybody starts telling him, sir, please make me your student. Plus, sir, which strategy do you use? And I think, can these people ever become traders? They do not have individual thoughts. So, Philip, I think the only way to teach is to be very, very honest.
Agreed.
Maybe I'm sounding bitter right now, but I think bitterness is the only way to go further.
Yeah, I think I can understand what you mean, because I think it's very true that there's a lot of information overload out there. And as such, most people, when they want to learn to become traders, they are constantly trying to find shortcuts. Can someone tell me what is a shortcut without me having to try to get out of that information overload? So again, I think what you suggest, and based on what my personal opinion is pretty similar, is that you just got to calm down, stay grounded, find one good book or find one person that you really believe is trying to teach the good thing, and go deep into it first, rather than keep on jumping here and there. Whenever you see a new guru, just follow. You see a new book, you just follow. Instead of doing that, get one good book, get one guru, dive deep and understand well, and see whether that makes sense to you or not before you move on to the next book or move on to the next strategy. I think that would generally be a better choice, right? Than keep on jumping all over the place.
Yeah, you know that the only reason that a person jumps from one strategy to another and one system to another or one mentor to another, the only reason for this is that they want to get rich very quick.
Yeah, exactly.
And you know the truth is that, you know, if you want to become rich quick, trading is not for you. Actually not for you.
That's true.
You know,
if you want,
you have to sacrifice a lot of things. Trading is not that easy business.
Okay.
The other day, I was telling someone that it would take 5 years for you to become consistently profitable. And he was like, 5 years? Oh, no, I don't have that much time. You know, what should I answer?
Yeah, that's okay. So that leads me to the next question right now, which is very applicable to just what you have commented. So there's this question from Anu, which is, I think, a very realistic question. How much dedication is needed, all right, for trading, assuming if you have a day job and you are not a full-time trader? So do you have any suggestion on for especially probably the majority of the traders out there who has either a day job or a day business that's not related to trading, and yet they want to get into trading? How would you suggest for them to tackle this issue of not doing it full time and still be a profitable or proficient part-time trader?
Okay, you want the honest answer? If I want to make it up, I can say that, okay, do not day trade, obviously. Do positional trading, long-term positional trading. But if you want an honest answer, investing can be done as part-time business. Trading cannot be part-time. Trading is a full-time business. The reason I'm saying this is that, you know, investing requires you to know about a specific company inside out. And once you understand a company inside out, you know, a company doesn't change its fundamentals on everyday basis, even on weekly basis or monthly basis. So you are okay knowing a company inside out, and even if you are not checking the markets every day, you are okay. You cannot be a trader like that, right? So even if you are a swing trader, it requires you to be aware of every single thing that is happening in domestic markets, in international markets, you know, in currency markets. You have to be updated. And I don't think that, you know, having a day job actually leaves enough scope for you to pay attention on trading. But if you still want to do that, I would still say that, one, do not trade derivatives. Do not trade derivatives. Obviously, do not day trade. Do not look at anything below daily time frame. This would be a very, if they want to write it down, they should. Only 2 time frames, weekly time frame and daily time frame. Do not go below that. Generally, a pattern or a structure on a daily chart plays itself over next 5 to 10 or 15, 20 days, right? So it gives you some scope there of being patient. So use only daily chart and weekly chart. Do not trade derivatives. Only then you would be able to tackle your trading business with your day job. Otherwise, there is no way. You know, if you ask me, you know, most people think that they are doing a job and they will make some quick money in trading. This does not work like that. In fact, Philip, I can give you examples of hundreds of people who are actually using their job, their salary, to refill their trading accounts every month. Right? This is what people do. You know, I personally know people who start with a trading account, they blow it out. Then, but you know, they don't feel that they are doing a mistake. Why? Because they're getting a regular money from their salary, and every month they refill their trading accounts. But if you'll see their accumulated losses, you know, you would break a sweat. So
could it be because they are like trading with a gambling mindset? Like as though you go to the casino, when you earn some money, you go to the casino and then you lose it everything. The next month you earn your salary, you go back to the casino again.
That is one, most, I mean, I would not say that think of trading as a business. It's been said a lot. Can you do a business part-time? I don't think you can do it. Market is a very, very tiring job. It takes almost entire day. Even after markets, you have to be continuously aware of things going on. So I don't think a job, if even if you become a good trader in your day job, I think you are doing some sort of what should I say? You would be sacrificing the efficiency in your job.
So in a way, with the advancement of technology, would you think that in time to come it would be possible to try to program and automate things so that you don't have to spend so much time monitoring the market instead, and you just use your time very productively just to study strategies and setting up the rules of your trading system and let automation get it done? Would that be possible to help retail traders in a way use less time but still trade effectively?
It can help, but I think technology is also a handicap. Just because you can trade does not mean that you should trade. I have never been, I do not belong to a time when people had to trade in the ring. I have not been a floor trader, right? It has been a big disadvantage because I have missed something of that sort. People who were floor traders, they are in fact doing very good with automated trading. And people who are starting their trading business from algos and from systematic trading, they just do not know what is market. You're getting my point? Just learning Python or just learning R, it does not make you a trader. So my point is that if you want to trade long term, trade only cash, and in case you want to automate things, why to even trade yourself? There are enough of services that you just give them money and let them trade on your behalf. Trading is, a lot of people ask me that do I do algo trading? I say no. Trading is romance. I do not delegate romance, right? I want to do it myself.
I see. Okay, so that's another question coming up, again related to just what you have said, the romance part itself. So a question from Makanda Bui: what keeps you trading up to today? What is it that keep yourself driven and motivated while doing trading?
No, I think this is my business, and it gels with who I am. The simple reason is that I am a puzzle solver, personally. So all my life I have been solving puzzles, and this is the only business which pays me for solving a puzzle. So I think this is, what I'm trying to say is that I do not want to give any exciting answer for this question. I do not want to say that, okay, it is full of challenges. So I get a ego boost when I make money. That is what makes me stick to trading. No, it's like any other business. When I was doing a business of exports, or when I was doing medical tourism, or when I was selling computers, I feel the same. I don't feel any. I'm a very what should I say? I'm a very, very conventional thinking kind of guy. I do not get bored easily. I can do things for years and years and years and years. So trading is a business, and it's just that for me. It's not something that it gives me a special sort of high. In fact, if trading would give me a high, I would become a bad trader.
That's true. Because you are letting your emotions come into the picture. Yeah. Because
why to give it too much importance? That okay, I love trading. It's okay. Let's keep it that way.
Okay, great. So all right. So this one question over here from this participant. His name is called Life, or maybe he just chose to put Life as his name. I've been in the market since 2009. I've taken many courses, read few books when it comes to trading. I'm still doing the same mistakes I used to do in 2009 and blow up my accounts in few sessions. Is it possible that trading is not for me? So, Nishant, do you have any thoughts about this? Is there any kind of criteria that you might think that trading is just simply not for someone, or have you met that kind of person before?
Okay. Yeah, it's a good question. Most people who enter into trading business, I know they see a lot of motivational videos on YouTube, which say that, yes, you can do it. Do not quit. I don't agree with this. There has to be a point where you say, okay, this is not for me. And I actually appreciate the question. He raised a very, very important point. In fact, realizing that something is not for you and stop doing it, it's not a defeat. It's a win. For example, I'll just give an example. For example, Michael Schumacher, let's say he tried his hands at golf, and after 4 or 5 years he realized that he's not a good golfer. What's the point in continuing golfing? Only when he will stop playing golf would he realize that actually he has interest in racing cars. So what I'm trying to say is that sometimes quitting is actually a blessing in disguise. You quit something that you are not made for, and you realize something that you are actually made for. However, I would say that the amount of losses that you have made should not be made a benchmark for knowing whether you are made for trading or not. Right? Someone can lose X amount in 5 years. The other guy can lose that X amount in 1 day. So amount is not a benchmark for understanding this. I think the only way out is an introspection, an honest introspection of understanding, what are your beliefs of life? What do you think of money? Are you in trading because you think that it will make you big money in a short amount of time? You need to be very honest with answering, right? Are you in trading because you don't have to answer to anybody? Being your own boss is very, very glamorous. It sounds glamorous, but it is very easy to pat your back. It is very difficult to kick your ass. So you have to understand all this. Are you able to do it? And if Philip, we have to understand, not everybody can do business. Then why to differentiate trading from any other business? It's just like any other business. Not everybody can be a businessman. So not everybody can be a trader. The reason investing works for most of the people is that it increases your time frame, and you don't have to look at it every day. You don't have to be very, very aware of technicalities of how markets work. That's why it works for most people. But yes, it's a good question. If you realize that, see, my suggestion would be this: read a couple of books, read a couple of biographies. Let's say start by reading Market Wizards by Jack Schwager. Then maybe read Reminiscence of Stock Operator by Edwin. It's about Jesse Livermore. Then maybe read Pitbull by Marty Schwartz. When you will read these 3 books, you would realize that how a successful trader is, how they think. You will get a benchmark of how a successful trader thinks. Then you ask that question to yourself: do I think the same way? Am I that kind of guy who can make big money? And be honest. If you are not, leave it. What's big deal? Life is full of opportunities. Why only trading?
Yeah, that's a great point. So let's say if we just dive a bit deeper. So if let's say I'm a trader, I tried it for a while, I read the books, it's just not for me, trading is not for me. And I decided that, okay, let's cut loss on my trading. I will not trade anymore. And investing is not for me as well. So for someone who has generated income, has savings, and he realized that trading and investing is not for him, what else can he do to generate reasonable returns on his capital while fighting inflation at the same time? Do you have any suggestion on that, Nishant? Should he just put the money in the bank, or should he consider finding someone to manage the money for him? And if he does do so, what kind of person should he look for?
if you look at the markets from the inception, you would realize that every single market, if I talk of India, if you'll see the chart from the inception, they are in an uptrend, right? Despite a 2008 black swan, whatever, it was not a black swan, but despite 2008 correction, despite a dot-com crash, despite everything, we are in an uptrend from the inception. So if someone cannot actively trade or cannot actively invest, I think there are lots of good mutual funds. You can do systematic investing. There is no harm in it. I do not do it. If you ask me, do I invest in mutual funds? No, I do not. Right? But something does not appeal to me, it does not mean it's not good. So if you are in markets for a long period of time, you are bound to make money if you are well diversified, right? And whatever I'm talking right now, I do not really follow, because I am not you. When I invest, I am invested in just 4 or 5 stocks. I do not diversify. Why? Because I know those companies inside out. So if you cannot do it and you still want to make money from markets, I think find a good fund and do systematic investment planning every month. Right? Put some money in every month, because you cannot rely on fixed income instruments and beat inflation. You just cannot do it. Fixed inflation instruments cannot beat inflation.
Yeah, I think you're pretty right on that as well. The only thing is that something you got to be careful about, based on case studies I've studied, is that this kind of way of betting on a country or a market for the long run, it might make more sense if you bet on a developing country. But for developed countries, the way I look at it is it could have very high risk, because generally for a very developed country, it is very hard to see significant growth and continue rise. Like what we have seen in Japan, it has been in recession for 30 years, and no one expected that, but it still happened to a country like Japan. And I suppose that if you're using this method on a developing country, then the chances of being on an uptrend over the long run should still be high. But on a developed country, we've got to be careful about that. What's your take on that, Nishant? Do you agree?
Yeah, I agree. And if you talk of Japan, most people have an opinion that inflation is bad for an economy, because most people do not have actual idea that how economies work. Ironically, Japan went down not because of inflation. They went down because of deflation, right? They got in something called deflationary spiral. So that is what actually took them down. So I understand that a right amount of inflation is good for any developing country. And if we talk of India, we are actually in a big bull run. If I take next 10, 15 years in horizon. So if you cannot actively invest or trade and still want to be a part of it, invest in installments, be well diversified, and you would end up making 15, 18, 20% on CAGR basis. And that's fine. That's fine.
I see. All right, great. So, all right, next question from PS Trader. Do you tweak your system depending on the DNA of a specific stock that you are trading, or do you actually apply your trading strategy or system across all the stocks of a particular market? How
can you repeat the question, please?
So I think what this question means is that when you actually think about analyze a trade idea or initiate a trade on any particular instrument, do you look at the individual characteristic and the personality of that particular instrument? Or is your strategy more about, let's say, I'm just going to look at this set of rules and I just apply across all the stocks without looking at them individually?
Okay, I got your point. Okay, I'll start with saying this. When you have certain sort of principles, certain concepts, and certain insights in your head, they are the background score of what you know. Then when you see a chart, a specific stock, that is data, right? That data interacts with what you already know about everything. And then you realize that, okay, what's happening here? You cannot really describe what you see in a stock. That is one. But yes, I look at the first thing that I look at in any stock, it is the market structure. It is how price has behaved since time immemorial. I have told this in my interview as well, that the key hands in a specific script, in a specific stock, the key hands, they do not change, and since in every stock there are certain people who tend to hold a big chunk, they run the stock and their behavior is similar. So what I'm trying to say is, I am not a formula based trader. I do not see that, okay, this is an evening star, so let's short it. I do not trade like this, right? I should also see that how have an occurrence of an evening star behaved in this single stock for maybe let's say last 10 years. You're getting the point? So we should. You have to, yes, you're right. So you have to apply your principles on specific stock behavior basis. You cannot, it's not one size fits all. It's never that way. Some stocks are used to make sharp corrections and slow shallow rallies. They are just used to do that. You have to understand the soul of that stock. You cannot, again the same thing. You cannot be a guy with a hammer who only sees nail in everything. You cannot just start with saying, okay, there is a shooting star or there is a doji. It does not work like that. Second thing that I want to press upon is the most important word in technical analysis. It is follow-up. When some people say that we are breakout traders, the only way to understand a breakout is, on any time frame that you are trading. Let's say you are trading an hourly time frame, and a breakout happens on an hourly time frame. Do not get in that candle, right? Let the breakout happen. In case the breakout goes too far away from the support, from the resistance, forget it. There are enough stocks in the market. But in case if it is still in a good distance from the resistance, wait for the next candle, right? The next candle, in case it pulls back, there are two things that you can see in the next candle. Either it pulls back to the resistance and it proves that the resistance has turned into support. Then you can use that breakout, right? This is one thing. The second thing is, if the next candle, it breaks out above the high of the breakout candle. You're getting my point? Then your breakout is established. So what I'm trying to say here is, what I'm trying to convey is that you cannot just become formula oriented. That, okay, a breakout happened on good volume, let's get in. It does not work that way. You have to have a holistic approach of the markets. That is why I ask people to read and think. That is the only way. You cannot take markets as, okay, now I have learned time cycles. Let me apply time cycle on every stock. It does not work that way. Every stock is different. I have personally experienced that there are certain stocks which range, the RSI behaves, let's say, from 60 to 80. In certain stocks, the RSI never gets above 70, no matter how high an uptrend is or how great an uptrend is. So you have to understand. Even I am a believer of RSI zones. I do not recommend oversold and overbought technique, conventional method. So I talk to people and I tell them that you should use RSI zones, 20 to 40, 40 to 60, 60 to 80. Even those zones are not same in every stock. There are certain stocks which range between 40 to 60 RSI. There are certain stocks which range between 30 to 50. So you have to have concepts in your head and then take every data as isolated data. People who are operating a specific stock, they are different in every stock. So when we see a chart, we should not press our concepts on that chart. We should listen to that chart and listen to what it is saying. I think this answers the question.
Yeah, I agree as well. So I think in a way, it's like how you treat people. It's like when you're trying to analyze this person's behavior. Let's say this person say, I hate you. You don't literally just take it as hate you as the same meaning from if it's said by everybody else. You need to understand when it's said from each individual, what is the
I mean, it's a good point. if your wife says I hate you, you don't take it literally, right?
Yeah, that's a good point. So I hope that that analogy can help everyone think about when you see a certain breakout, you see a certain candlestick formation. Do you just simply take it literally as it is, or is it necessary to take a look at previously whether this kind of behavior is resulting in similar kind of outcome as well? So in a way, it's kind of a visual back testing to see if certain things fits the characteristic of a particular script or instrument, right?
Yeah.
Okay, great. So one question from Sanal over here: how to have a universe of stocks? I think that is a very interesting question as well. So maybe Nishant, would you like to share a bit about how do you actually decide on the group of stocks to put inside your watch list before you look at even trading them?
Since I am a short-term trader, right, and I trade considerable amount of position in every trade, and I trade both day trading and swing trading. My personal universe is only futures stocks. That gives me some 200 stocks to manage. In case someone has a higher horizon, let's say of 6 months, let's say of 1 year, in that case, even mid cap universe can work wonderful, right? The shorter the time frame, the higher liquidity you need in that universe. Getting the point? If your time frame is higher, you can even go to you can even choose a universe which has little bit lower liquidity. That is all right, because your time frame is very, very high. But if your time frame is low, for example, if somebody is a day trader, the universe gets very, very small. You need very, very highly liquidated stocks. So I think liquidity is a very, very important. Liquidity and market cap. These two parameters are very important when choosing a universe of stocks. But if someone, if you ask me specifically about India market, and if your horizon is, let's say, a couple of days to a couple of weeks kind of thing, so I would say that Nifty stocks are a very, very good watch list to follow.
For a start, maybe.
For a start,
initial list.
Yeah, because let's say Nifty is 50 stocks. It is good to have an idea of those 50 stocks, know everything about their charts, and just move around with it. You cannot be looking for everything. But if you have a higher time frame, I would again say, if you have a higher time frame, please include mid caps also. Mid caps and higher small caps. But if you are a trader, a short-term trader, I don't think you should go any down than large caps.
I see. Good point. All right. So this next question from Sushan: is backtesting necessary before starting to trade any system? So Nishant, for you personally, I understand that you are probably more of a discretionary trader, but in any case, do you personally do any kind of backtesting, whether it's like using formulas, algorithms, or maybe even visually backtesting before you actually start trading any kind of system or methodology?
Even my backtesting is discretionary. The point I'm trying to make is that when you backtest a system, right? A system is nothing but a formula, a set of queries. When you backtest it, it's sort of, it gives you a self conviction that this thing is working. But trust me, it has nothing to do with that it will work. It just has nothing to do with this, right? So even when I'm drawing a trend line for, let's say, last 10 years, I have drawn a trend line which is comprising of price action for last 10 years. And that trend line is getting respected every single time. It's also a sort of backtesting, isn't it? If a stock is taking support at a 200 days simple moving average, if it has been taking support for last 5 years, isn't it backtesting? So this is my point. For example, I am a discretionary trader, and I will only talk about that kind of domain. Some people, what they do is, let's say they are seeing a stock, and the stock goes above let's say 200-day moving average, and they think it's a long. What I suggest is look at the history of the stock. Look at every single instance when the stock crossed above 200-day moving average, and see how it behaved then. You know, you got my point.
Yes, so that's basically a kind of visual backtesting in a way, right?
My point is that technical analysis in itself is a backtesting. When you are talking about technical analysis, it is backtesting. But yeah.
So in a way, it's like if you have a certain strategy, like if you want to use a bullish candlestick reversal pattern, so what you go is you just take a look behind all the way to see if any such cases happened before and whether it obeys similarly, and it has to be dependent on script to script basis, right? Rather than just taking that pattern and applying across throughout. Then that's without backtesting.
Yes. See, I do not spread myself too thin. You know, at any given point of time, I do not have more than 2 positions. So having said that, if I'm just trading 2 stocks at any given point of time, 2 or 3 stocks, I think I would know everything about them, right? But in my personal opinion, I don't think that backtesting a system and then applying it on every single instrument, it does not work. It does not work. It just doesn't work. I mean, history cannot be a harbinger of future. Of course, we need past data to extrapolate it to future. That's what technical analysis is all about. But something has worked for 5 years. It does not mean it will work tomorrow.
It only suggests that there's a higher probability. That's it.
That is one. And what I'm going to say right now, I know it's not going to go down well with a lot of people, but I personally think that even a system mindset for trading, I don't think it's a healthy mindset. You know, I spend most of my time telling people that there is no formula. So if you are trying to bind yourself in a formula, I don't think it is even healthy to start with.
Okay, great. So, we only have about five to maximum 10 more minutes to go before we have to end this session. So I'm trying to run through as many questions as possible right now because there's still a lot of questions that remain unanswered. So one question from Raj over here. What would you suggest for a novice trader with minimum capital? Is taking loan to trade a good idea if you think that you are serious and disciplined enough? What's your take on that, Nishant? What's your take on borrowing money to trade if you're undercapitalized?
Not at all. I would downrightly discourage this practice. The reason is that if you start, let's say, if you decide to start a factory and you decide to take a loan and borrow money and to start a factory, you buy some machines using that money. And if that business is unsuccessful, you still have assets with you. Right? You borrowed money to create some assets and you intended to use those assets to create money. Of course, you couldn't create money, but you still have those assets which you can liquidate to get money. In trading business, if you will borrow money, you are not making any assets. Right? Every single penny that you borrow can go down the gutter in the very first week. So I think it is. You know, personally speaking, I have taken loans to invest. I will not deny this. I have never taken a loan of single penny to do trading.
Okay, so trading, got to look at it from the perspective of using excess cash that you have to generate returns. It's not to use it as a main business. I don't know. What's your take?
That is one, and you should. You know, trading is not for undercapitalized. If you have, let's say, if you have $500, you can invest, right? You cannot trade. It is not for undercapitalized. A lot of people ask me that what should be the ideal capital to start trading. Let's say the other day someone asked me what should be the ideal capital to trade one lot of futures in any stock. And I said, let's say a stock allows you to have 5 times leverage, you know, in terms of margin money. Make sure that you have, you know, at least an amount equivalent to the entire contract value of that position. unless you have that sort of an amount, do not buy a lot. And I have a very, very clear-cut principle on this. If all you can afford is one lot, do not trade futures.
Okay, which means you're undercapitalized for futures trading.
Undercapitalized, yes. If you are capitalized to trade 5, then you must trade 1. Because that gives you, scope to manage positions, scope to take a couple of hits and still keep going. So that's very important. Do not think of trading. What I'm trying to say is that a lot of people are taking money, they are training beginners, and they are telling them that anybody can trade. I do not agree with this. Not anybody can trade.
Okay.
Right. Even if it costs me a lot of followers, I will still say not anybody can trade. And trading is not a joke. That okay, I have some free cash in my account. Let's trade. You will lose it.
Yeah, I think the basic point is, if you're undercapitalized, I think probably the best way to go about that is find ways to earn money first. Make sure you are well capitalized before you look at trading to generate returns on those monies that you already have, rather than trying to borrow money to do trading.
One more thing, there are hundreds of ways to make money in life. Trading is just one of them. So as a businessman, trading is my business, but I still have an eye for opportunities in any sector. But if all you want to make money from trading, and you know that you cannot do anything else, I think that is because you are thinking of trading in a wrong light.
That's true. Maybe your motivation for trading is wrong in the first place.
It's wrong, yes.
Okay, great. So a question here from Mahesh Gahani. I am a part-time trader. I want to enter market on a full-time basis. What should be the correct steps? So, Nishant, do you have any suggestions or advice or perspective in terms of a trader who is on a part-time basis right now wanting to go full-time? What do you think is the right time for someone to think about doing that?
I think he should make sure that he's at least consistently profitable for at least 2 years. A general market cycle, 2 years, a market cycle is good enough to have a good sample size of data. So if someone is consistently profitable month on month, I'm not taking it, let's say, day on day or week on week basis, but at least month on month basis, if someone is profitable for 2 years, only then he should take a call. That is one. Second is, if you want to ask me that whether I should do full-time trading, my question to you would be, take it in reverse. Understand that even if you are a wonderful trader, you will not make more than 20% on a CAGR basis. Just try to swallow this fact. So you have to question yourself, if I make 20% on my capital on a yearly basis, would that 20% be enough for me to run my house? After taxes and commissions.
Your net profit.
Your net profit. Most people, when they start, they think they somehow overestimate their capabilities and they underestimate their obstacles. It's very natural thing, but you have to be very, very cold and fact oriented when it comes to doing any business. So you have to understand that you will not make more than 20%. Okay, and you have to understand that the net of that 20%, will that be enough to run expenses? If yes, only then go for it. Do not think that no problem, I will make 50%. Do not think that way, because you will not have a 50% year every single year. So that's one thing. And let me tell you, if everybody will honestly do this do this calculation, most of people will realize that they are in the wrong business.
So I suppose, to add on to that, based on the way I think as well, is that probably the returns you can generate on average to meet your family obligation might not even be enough. In fact, it should be significantly more than what your return should be significantly more than your family's requirements for financial security. Otherwise, if anyone starts trading full time from a part time basis and keep on having this thought in the mind that, well, all the returns I generate is only just enough to help the family survive, that could psychologically affect.
I think you must have at least 1 year of reserves with you, 1 year of expenses reserves for you, for your family. Because, if somebody is profitable for 2 years, having said that, if somebody is profitable for 2 years in part-time trading, that does not mean that he will do good in full-time trading. Even the psychological effect of going full-time, it puts a lot of pressure if you have a bad month.
Exactly.
So you have to have a good amount of cash reserve with you. There's an old saying which goes, if you need to make money in trading, if you need to make money, you will not make money.
If you are too desperate to make money, it's very hard for you to make. Okay, great. So right now we have almost gone past the 1 hour time limit we have set for this live Q&A. So I have one final question for Nishant to answer from Ganesh, and I think this is really applicable and suitable for final questions over here for Nishant. What are your future plans for TFS? Do you intend to start a PMS or a trading course, or a fully dedicated school for traders? So Nishant, would you like to answer this particular question from Ganesh?
Yeah, sure. In fact, I would like to thank Ganesh, because he has actually given me an opportunity to convey my vision of TFS. When I started TFS, I did not even think that we would reach where we are. But since we have reached somewhere, it has given wings to our imagination and our plans. Having said that, I don't think we will start PMS, and I don't think that we would go into fund management. The reason being is that, I am a businessman, because I do not like to answer anyone, right? So managing someone's money, I think it is like being an employee. So I would not do that. I'm very, very happy managing my own money, and I'm satisfied with that. But I would want to do something very, very revolutionary and something of a big scale in education. So when we talk of future plans of TFS, I think it would be education. We would be coming up with an academy, and our basic agenda would be, and I think we are planning to go into different directions within the academy. One, that we would be giving, we would be having seminars and workshops. That's one. Secondly, we would be offering some online courses and pre-recorded video lessons, series of video lessons on specific topics. And we would also offer maybe one-to-one or a very, very small batch kind of services. But having said that, TFS will always remain in education, not in fund management. We want to enable people to make their own money. We will not make money for them. In fact, managing somebody's money and giving them returns, it is contradictory to the very, very basis of TFS.
The values, which is to help people become independent.
Yeah. So only education, I would say, only education.
Okay, great. I think that is something that is very heartening to know for the TFS members who are joining us today in this live Ask Me Anything webinar with Nishant. And I believe that for those of you who do not yet know what TFS is, but felt that you have learned greatly from Nishant, that is also something that will be very interesting for you to know as well, especially for those people who are actually staying in India and trading the India market. So again, thank you so much, Nishant, for joining today's live webinar and being so candid to answer all the questions from the participants. And I also like to thank the participants for being so alive, so lively very late in the night right now and continuing to ask questions. So before we go, I'd just like to share, for those of you who are not already in TFS, if you think that you like what Nishant has shared with you and you are keen to learn more from him and to participate with his group members, feel free to look up in Facebook for this Techno Funder Society, which we will share the link in the comments very, very quickly later on, as well as we will, for those All Access Pass members of the Online Trading Summit, we will also share the link of the TFS Facebook group in the video recording that we will actually publish in a few days time. So if you like to look out for that, just click on the link and you will be able to continue follow what Nishant is sharing about his trading experience and also to interact with the members. All right. So thank you so much again, everyone, for participating in this live webinar. I hope you have benefited from it. And I wish you all the best in your trading journey, and we will talk soon. All right. And that's it. Thank you, everybody. Have a good night.
Thanks a lot, Philip. And I'm really, obliged to each and everyone here who asked questions, and even to those who haven't asked but still are still there. My only message would be that, Philip has already given you the name Technofunda Society. We have a group here, and please feel free to join, and do not just be a mere spectator there, right? Please feel free to ask anything. What I would like to say here is no question is stupid. In our group, we do not mock beginners. And trust me, we do not let anyone do that too. So ask anything. And okay, I understand that I cannot answer everything personally, but I still try to do it. So maybe there would be a delay, but I would answer your questions. So please feel free, and TFS will actually offer you everything that you need to know.
All right, great. Thank you so much, Nishant. Thank you, everybody. Have a good night.